Hey, good afternoon, ladies and gentlemen. It is Thursday's Market SITREP, or Situation Report, here at TGO. That's Top Gun Options. My name is Matthew Buckley. My call sign is Wiz. A good article in the Journal about Iran's fast boats and mines bringing guerrilla tactics to the Persian Gulf. Not anything new. It's just interesting to see the media start to care about stuff like this. I remember going through the Strait of Hormuz. I think it was on Lincoln or Kitty Hawk, can't remember, but a bunch of these fast boats came out hiding behind some islands, kind of circled us like some Indians, and then went off into Omani waters after kind of giving us the international bird there. Why does this matter? Things are really starting to heat up, obviously, in the Arabian Gulf. The tankers that were attacked about 3-4 weeks ago. Obviously, we said we have no doubt that Iranian naval mines were used. Intel saw about 70 of these fast boats leave Iranian waters, head to the area of these tankers. That night this happened, and then mysteriously left, and 51 minutes later, boom, goes the dynamite. But obviously, people with tinfoil hats and black helicopters flying around their house are going to believe that we did it just to get into a war with Iran. Nobody wants a war with Iran, folks. But any country who is trying really, really hard to get nuclear weapons, if they don't already have them, and screams death to America, death to Israel on a daily basis, you probably want to pay attention to those folks. But call me crazy. So we'll keep an eye on what's going on in the Arabian Gulf. Good stuff going down in Brazil. The EWZ, which is the ETF that tracks the Bovespa and the Brazilian Stock Exchange. Another rip-your-face-off rally, up another 1.5% today. I mean, this thing is just getting out on a horse and galloping away. I have a bear call spread. Unfortunately, that's underwater, but we've been trading the hell out of the EWZ for years and seen some great returns. So even though we have a bear call spread that's underwater, our Jan 21, we have Jan positions out to Jan 20 and Jan 21. Those things are looking very, very tight. Very good returns in the EWZ. This is one of we used to call it a Captain Kirk trade, meaning boldly going where nobody has gone recently, and it's been an interesting ride. Even though it looks essentially flat, all of these wild swings and movements we could potentially make money on, bullish, bearish, or neutral. So we'll talk about the EWZ today, the EWZ position today at 1 o'clock in our analyzer trade and weekly debrief. Trade war is getting deeper, folks. Now China has accused us, you ready for this, of economic terrorism. So I think the increased tariffs that are supposed to go into effect on us from China June 1st. Guess what? I think that's going to happen. I don't think between now and tomorrow the Chinese say, you know what? Don't worry about it. We're not going to raise. Actually, the rhetoric's getting worse. So today we're conducting economic terrorism. Yesterday it was, hey, don't say we didn't warn you. A Chinese newspaper who's only used that sentence twice in their history, right before the 1962 border war with India and right in front of the 1979 China-Vietnam war. So this is the third time they've used that type of language. So it's getting worse. And it looks like, in about 2-3 weeks, our next round of tariffs on $300 billion in Chinese imports is going to go into effect. I don't see the president inching back from this. And here's what makes this worse. I got to be honest with you, Bob Mueller's absolute shit show yesterday. So I guess our new standard in this country is, I can't prove you did it, but it doesn't mean you didn't do it. That's not the way justice works in America. That man is an awful prosecutors bring charges. They either indict or they don't, and they don't sit there and walk out and hold a press conference and say, well, I couldn't indict him, but doesn't mean he didn't do it. It's the same system that said OJ was innocent, right? This is either take it or leave it. But here's why I'm bringing up the Mueller thing, is because at the end of the day, the Chinese are going to look at that and go, well, this dude's he might not even make it to his the end of his first term. The guy's going to be impeached, thrown out. They really don't get our domestic politics, but they can. I think what Mueller did yesterday was embolden the Chinese to sit on their hands. So starting to see a little bit of recessionary activity in some macroeconomic data, which isn't good, which is probably going to force the Fed to act, to cut interest rates. I mean, it looks like the market, the tail's trying to wag the dog here and force the Fed to cut rates at least twice this year, maybe even more. So we're starting to to see some recessionary indicators flopping around there. So yesterday's sharp sell-off, right down to the 200-day moving average. We're in a holding pattern right now, plus or minus on the Dow and the S&P 500. We broke through that 2,800 level. That was resistance back here, was support here. And if we don't hold this 200-day moving average today and tomorrow, I think we're heading lower. And look out below. And we nailed all that. We predicted that volatility was going to stay elevated and head higher, and we were right. Volatility spiked, stayed elevated, and is heading higher. So, and it's not too late to get long volatility here, folks. So, stocks more or less trying to regain some footing amid bout of volatility. There you go. Nice segue there, and we're gonna have to hear from the Fed soon, folks. Because a lot of companies are starting to pre-warn and say, hey, this trade war is now starting to impact us. What's the Fed going to do? Right? If the Fed comes out and does some sort of out of the blue massive rate cut, I think it's going to soothe the masses initially, and then the market's going to go, wait, what the hell's going on here? It must be a hell of a lot worse than the Fed is letting on. So really, really interesting. This might be the big one. I always laugh and jokingly call it the Fred Sanford, right? Grab your chest and this is a big one. You big dummy. Corporations were the biggest buyers of stock during the bull market, but now they're selling. The number one buyer of the S&P 500 year to date has been who? The S&P 500. And now they're starting to sit on their hands, or they're starting to, what did that say? Sell. We joked last week here at Top Gun Options that there was a big headline that said, hey, here come the hedge funds. The hedge funds are back and they're jumping in with both feet, and that was your contrarian indicator last week. I laughed about it and told you that. I said, hey, man, when the hedge funds and the hedge fund managers who have missed out on this rally decide to jump into the pool, it's the reverse of seeing the headline of here comes the retail traders. That was a great sell indicator last week, and you heard that here at Top Gun Options. Have a great weekly options trade going down range on Apple. We have an Apple bear call spread that we put on Tuesday in a joint brief. Look at that, folks. The Apple bear call spread is up $1,800 as of me shooting this video, and it looks like by tomorrow this thing's going to hit a max profit of $2,700. Look at that, risking 48 to potentially make $2,700. Great trade, nice bearish trade on Apple. Apple's going lower, folks. Rotten Apple. They are the biggest company in danger of a trade war. I've reported that. Man, look at that. I've reported that the Chinese people are actually embarrassed now to go out in public with their iPhone as the trade war deepens. It's like anti-Chinese. It's like unpatriotic to have an iPhone, and China has actually warned Apple, like, hey, you're first. Not only could we boot you out of this country, but we could also slash exports of a lot of the precious metals that you use in your beautiful iPhone. So this is going to get worse, folks, before it gets better. Until some adults kind of step up to the table and say, let's figure this out. So a lot going on. We have a 1 o'clock brief, and then tomorrow afternoon at 1 o'clock we're going to do our solo Amazon service. Love it. Brand new service. Amazon is kind of plus or minusing and hanging out here, skimming right underneath its 50-day moving average. I've briefed folks in that service that Amazon is a round number stock. It likes 1,800, likes 1,900, hangs out maybe every once in a while in the mid number there, 1,850-ish or 1,750-ish. Or 1950-ish, but right now it really does seem like it's having problems getting off this 1,800 level. But tomorrow, since we have a lot of new folks in the solo Amazon service, we're going to talk about establishing a new base position in Amazon, and we also take a look at the XLY in that service. Why? Because the XLY is made up of 25% of Amazon shares. XLY is the consumer discretionary ETF. Got a lot of other good names in there, so we'll cover both tomorrow at 1 o'clock. All right, I got to go get ready for my 1 o'clock brief today. Analyze your trade and debrief. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll be back tomorrow with Friday's market wrap-up. We'll see you.